Now it's time to get some practice with what goes where on the statement of cash flows. So at the bottom, we've got our two training aids. Here's the whole statement of cash flows in the three sections: operating activities, investing, and financing activity section. And then we've got our visual representation too that so many students like. So let's get started. So we've got cash transactions that involve revenue. Which section would that go into? Well, revenue is part of net income. Remember, the formula for net income is revenue minus expense. So revenue is already embedded in net income, and net income goes in the operating activity section. So the answer is operating activities. How about cash transactions that involve expenses? Well, once again, net income consists of revenue minus expenses. So the expenses have already been accounted for inside the net income. So expenses are embedded in the operating activity section in the form of net income. How about cash transactions that increase or decrease long-term assets? Well, changes to long-term assets goes in the investing activities section. And some examples, of course, are buying, selling equipment, or other plant assets. Let's say we sold a building for $5,000 gain and we got cash. Which section or sections does this transaction go into? Well, there's two answers. As we've gone over before, the cash from the sale appears under the investing activities section. That's because long-term assets are being affected. That's the more obvious of the two parts that this goes into. But remember, the gain, that appears in the operating activities section up here. And because the gain does not involve cash, remember the cash portion went down here in the long-term assets. You can't double count the gain. So the gain has to be reversed or backed out of net income, because as you recall, gains and losses are embedded in net income. That was one of the harder ones that we'll face. How about cash transactions that involve long-term loans payable? Well, long-term loans payable go in the financing activity section. You're borrowing money to finance your company, and of course, it's a long-term liability, so that goes in the financing section. How about cash transactions that increase or decrease long-term liabilities? Well, it's the same way as the one up above. That goes in the financing activities. An example is selling bonds. How about cash transactions that increase or decrease owner's equity? Well, according to our grid down here, that goes in the owner's equity section. Excuse me, that goes in the financing activity section because it's affecting owner's equity. Examples are issuing stock, buying and selling treasury stock, paying cash dividends, because remember, cash dividends affects retained earnings, which is an equity account. How about cash transactions that involve issuing stock? Stock is an equity account, so that goes in the financing section. How about cash transactions that involve paying dividends? Well, when you pay dividends, that lowers retained earnings, and retained earnings is an equity account, therefore that goes in the financing section. How about cash transactions that involve buying or selling treasury stock? Remember, treasury stock is an owner's equity account, so that goes in the financing section. How about borrowing money? If it's a long-term liability, that's going to go into the financing section. Let's say you purchased a building for $200,000 cash. Which section does that go into? Well, a building is a long-term asset, therefore it goes in the investing section. Let's say you issued $10 par preferred stock for cash. Which section does that go into? Well, preferred stock is an equity account, so therefore it goes in the financing section. Let's say you received cash from sales to customers and you got $35,000. Which section does this go into? Well, when you make sales, sales is revenue. And remember, revenue is embedded in net income. So revenues are embedded in net income, which is in the operating activities section. How about paying cash to vendors? Remember, a vendor is a supplier, someone who sells stuff to you. This will go in the operating activities section because this is generating expenses, which of course is embedded in net income. Let's say you purchase treasury stock for $15,000. Which section does this go into? Well, treasury stock is an equity account, therefore this goes in the financing activity section. Let's say you had a loss. For example, you sold a factory and the transaction resulted in a loss. Well, there's two answers. The cash from the sale is going to go into the investing activity section because the factory is a long-term asset. And then the loss is already embedded in net income, so it has to be reversed. So we have to add the losses, and this goes in the operating activity section.